Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial report of Nobility Homes. It's a smaller company, so maybe not as exciting as some of the giants, but don't underestimate it. This report has all the telltale signs of what's really going on behind the manufactured home business, or maybe I should say the unmanufactured truth. So let's get to it. The Nobility Homes just released their quarterly report, and the big story is that while sales are up a bit, profits haven't quite kept pace. We will scroll and explain into the numbers to see underlying the cause, but before we get started, if you appreciate getting straight insight from corporate documents, then make sure you subscribe. And we also have a Discord community discussing these filings in the description below. So see you in there. So let's break it down. We're comparing their situation on May 3rd of this year to how they looked back on November 2nd of last year. Basically, we're looking at their health over the past 6 months. First off, their accounts receivable, which is basically money owed to them, is up a bit. It went from roughly $2.9 million to around $3.7 million. This could mean they're selling more on credit, which can also mean more risk. Their property, plant and equipment net stayed pretty consistent at roughly $8.3 million. This means they haven't made big investments in new factories or equipment. On the other side of things, customer deposits went down. 6 months ago, it was nearly $6 million. Now it sits at roughly $4.7 million, which can mean that either fewer people are making deposits on homes or they're fulfilling orders at a faster rate. The number of shares outstanding has remained consistent in the couple of decimal places over the last 6 months at roughly 3.25 million shares. Their net sales or total revenue increased a little, from about $26.3 million to almost $27 million 6 months later, and cost of sales, which is the cost they sustained to make the product, also increased. Bottom line, Nobility Homes made roughly $70 to make the product, also increased. Bottom line, Nobility Homes made roughly $700,000 more in revenue. Their general expenses decreased slightly and were roughly $3.5 million at the end of this period. Interest income increased from roughly $517,000 to $583,000. This means they're making more money off their investments thanks to high interest rates. After paying about $1.4 million in income taxes, they are left with $4,272.742 in net income. All this leads to an earning per share amount of $1.31 compared to $1.34.34 1 year ago, meaning that if you had one Nobility's home stock share, you would have earned this much. Let's switch over to what's happening with the owner's equity in the company. Their net income increased from roughly $1.5 million to nearly $2 million. Their current balance sits at $56,863,796 for shareholders' equity. Now let's see what the state of cash is looking like, specifically how the business is making cash. It currently sits at $3,296,907.77. The company did not make huge investments into making big purchases. A hefty cash dividend for investors, draining $4,086,247 million of that cash. All this to say the company current cash reserve decreased from $13.5 million to $13.03. They're nothing too much for changes in terms of recently issued accounting standards. New home inventory is carried at a low of cost or net realizable value. There's some jargon that can easily be translated by reading it twice, so make sure you listen to the terms again in simple language. The company's short-term investment consists of equity securities in a public company and had an estimated fair value of roughly $500,000. The company classifies how they value items based on one of three levels. This is mostly a formality. The company is fairly simple. Its revenue source comes from manufactured housing homes commissions. The homes sold through company-owned sales centers makes up the vast majority of the company, around 10 mil to 14 mil. The main points from management analysis shows overall net sales have increased, but it also mentions that this may not be indicative with full fiscal year results, so expect some potential downwards movement. It also acknowledges affordable manufactured housing demand has slowed down, so this may affect future projections. Key sales numbers are up, however, so there is potential upward movement depending on the overall environment outside the specific niche market of Nobility's homes. Last but not least, many external factors will determine this company's outcome, such as material costs and general market inflation. The management CEO and CFO have signed off saying all the internal measures align with what is appropriate, so as of now they're checking out. Alright, so drawing opinions overall, Nobility Homes is in an okay position. They're profitable, they have good cash, but the wider economic slowdown could potentially affect the company. The main strength is no doubt high cash reserves, but at slow revenues. In the midterm, they need to figure out how to deal interest rate environment and external forces while maintaining a financial position to jump on great deals. Else, overall, Nobility Homes might be in for a slightly bumpy ride, but their strong base should let them weather the storm. And that's the Decoded Corporate Decoder take on the latest Nobility Homes report. This is not financial advice, so don't come at me if you lose money because of something I said. Now, what do you think? Is Nobility Homes a buy, hold, or sell? Drop your thoughts in the comments below. Did you find this analysis useful? If so, smash that like button, subscribe for more Corporate Decoder deep dives, and don't forget to join the Discord community linked in the description below, and see you in our next video.